Hello everyone. This is the pre-market report video for today, 29th October 2024 for the Indian stock market in terms of Nifty and Bank Nifty. Please pause the video for a second and have a look. The blue color circle highlighted one are the place where Nifty increased 100 points in 15-20 minutes. And the red color circle where Nifty fell 100 points in very short time. Hence, clearly yesterday there was a huge tug of war between the buyers and sellers. So now the question is, who is that buyer and who is that seller? To answer that, in the derivative market, the buyer was FII and the seller was proprietary traders, or in simple terms, we can say domestic professional traders. As we see here, yesterday FII reduced their short position from 63% to below 60%. On the other hand, proprietary traders increased their short position from 65% to 67%. To be honest, yesterday proprietary traders haven't added or short covered any long position. In fact, they reduced the open interest on the long side and they further increased their short position. Whereas in overall number, FII increased 7% of their open interest on the long side and decreased 7% on the short side. So for the third day in a row, it's not FII that was negative and wants the market down. It's actually domestic proprietary traders. Usually, it's very easy to predict the market direction if both proprietary traders and FII's interest aligns in the same direction. But it was not the case in the past 2-3 days. However, for the expiry or for the short term, still FII controls 37% number of total open interest on the short side and proprietary traders controls 16% on the short side. Hence, overall, both of them wants the market to go down so they can make money. Just for info, the total number of active FII in the derivative market is less than 200, and for the proprietary traders, I'm not as confident as FII number, but it is also roughly around 200. So 400 people controls 40% of open interest in both derivative market. So no wonder we have this sudden spike and sudden drop. If market goes up, I'm happy since I'm holding some call option, but I doubt it. Anyway, this is the segment wise put call ratio, and for the complete options open interest analysis, I added the article in the YouTube community page. Please have a look. Yesterday's positivity was mainly created by ICICI Bank quarterly results, and technically for the first time in the last 1 year, daily RS indicator fell into the oversold region, which all we discussed in detail in the last pre-market video. So those two created the short covering mainly with FII and made the Nifty to move above and close above 24,300 mark. And sector wise, all the major sector closed positive, particularly media, metal and PSU bank, which increased above 2%. Overall, 62% number of listed stocks increased and 34% of the stocks decreased. About institution, in the cash market for the 20th consecutive day, FII was net sellers. The net sold for 3,230 crore rupees. However, on the derivative market, FII net bought for mega 44,300 crore rupees, and as usual in the cash market, DII net bought for only 1,400 crore rupees. So the takeaway is stock fundamentals and technical made the market to go higher, but the derivative market made sure it doesn't go above 24,450, which all technical and its relevant volume profile we will discuss in the technical analysis section. Then coming to US market, it's another day there was no major macro released last night, but in the next few days there are big events. Like tonight, September month end US available job opening and Google's quarterly results is due. Tomorrow, US GDP data, Facebook and Microsoft result. Then on Thursday night, PC inflation and Apple and Amazon's quarterly results. And finally on Friday, US jobs data is scheduled to release. So despite all this event and results due, last night US market closed positive. Dow Jones up by 0.65%, then both S&P 500 and Nasdaq increased 0.27%. In case of VIX, it reduced and dropped below 20. US VIX is just zigzag, one day going up above 20 and one day going down below 20. Then regarding Indian ADR, all four major one as it is closed positive, especially banking stocks closed super positive. positive. So even if we calculate the arbitrage, both ICICI Bank ADR and HDFC Bank ADR both indicating positive arbitrage of over 1%. However, the same was not seen in the IT stocks ADR. Hence, we can say banks clearly positive indication, but IT stocks more of a mixed. Then in case of Reliance GDR, it closed marginal negative and it's indicating negative 1% arbitrage. But please be aware, yesterday Reliance GDR trade volume was very low, and also today is the first day after bonus issue record day. So we can say Reliance will be on focus. Then about GIFT Nifty, early morning today it closed at 24,415. So equating it with the spot market, for now it's indicating the gap up opening of 40 to 60 points. Coming to oil, no escalation in the Middle East, so it haven't changed much. WTI crude oil is trading around $68 per barrel and Brent crude traded at $71.5 per barrel. Finally, regarding today's stocks in focus, kindly please refer the article in the community page. I don't want the video to be more than 10 minutes. As a summary, US market closed positive, global momentum is good, GIFT Nifty and banking ADR all indicating the positive opening. However, will the proprietary traders allow the market to go higher before the expiry? Only time will tell the answer. Moving on, as per stock open interest, Federal Bank, UBL, Marico, SBI Card, Apollo Hospital, Page Industries and Coal India got an increase in open interest along with a negative close, indicates the short build-up. On the other hand, Aker Motors, MCX India, Lupin, IEX, JK Cement and Laurus Lab got an increase in open interest with a positive price close, indicating the long build-up. About the things to look out, Maruti Suzuki, Cipla, Adani Enterprise, Adani Ports, Canara Bank, SBI Card, Marico and Engineers India are some of the major Indian companies' earnings results are scheduled released today. In terms of macro, early morning before the market opening, Japan's unemployment rate is due to release. Then nothing during our market hours, but after that in the night, for US, September month end available job openings data, Conference Board consumer confidence data and housing inflation are the important items we need to keep an eye out today. Coming to technical, Nifty opened 70 points gap up and for the first 45 minutes it was really volatile. However, after that it moved above 24,300 and remained volatile but managed to close above 24,300. Thus on the daily chart, Nifty formed a bullish candlestick pattern with upper and lower shadow, which indicates the tug of war between the buyers and sellers. And if you see the volume profile, majority of the trade 70% happened between 24,390 to 24,450. Hence, yesterday closing was below this high trade volume zone, or technically it was called as fair value zone. So this 24,450 is the strong resistance, and for the upward journey, I think a decisive breakout and trading for most part of the day or closing above is required. Similarly, if you see the volume profile for this week expiry, then downside fair value zone was between 24,050 to 24,100 zone where buyers came, hence that's the immediate support zone. A decisive drop below 24,000 might trigger panic in the market. Then in case of Bank Nifty, it opened 270 points gap up and also rebounded after a sharp fall and managed to close above 51,250. Thus on the daily chart, Bank Nifty formed a bullish candlestick pattern with a long upper shadow, indicating selling pressure at higher level even though the volume was significantly higher. Bank Nifty managed to climb above 100-day exponential moving average, but still it was below 20 and 50-day exponential moving average as well as below 20-day simple moving average, all of which are crucial levels for resuming an upward journey. Hence now, as long as Bank Nifty holds below 51,500 zone, weakness could be seen towards 51,000, while on the upside a hurdle is seen at 51,500 and then at 51,750 level. On the options front, the maximum call option open was at 25,000 strike, followed by 24,500 and 25,500, with maximum new call option writing at 24,800 strike and then 24,500 and 24,900. On the put side, the maximum open was at 24,000 strike, followed by 23,500 and 24,500, with maximum new put option writing at 24,000 strike and then at 24,200 and 24,300. Thus, from options data, it's indicated that Nifty might face resistance at 24,500 with a support at 24,000. So that's all in this video. Hope you all got some useful information. Please consider subscribing to the channel and liking the video, so it will help me beat the YouTube algorithm and also motivate me to do more. Please don't make any investment decision based on this, as I'm not a SEBI registered advisor. I'm doing this for me and viewers educational purpose only. Thanks for watching.